Hello, everybody. I am Carla Dennis. I am America's tax advisor, and I want to talk to you guys about the CARES Act. And what is this? The CARES Act is a bill that the president signed into law on March 27th. What does CARES stand for? It is the Coronavirus Economic Relief Stimulus Act. Because the government shut down businesses, because people are no longer able to work, the economy could tank. Our government has the methodology to be able to put resources into play to help Americans. So this bill that went into law now has 14 provisions in it that are going to help you, and it's going to get you help sooner rather than later. So I want to talk to you guys about some of those provisions. Some of them may apply to you. Some are going to apply to businesses, but we need to be aware of them. Provision number one, what we've all been hearing about, these rebate checks, these stimulus checks. That's one of the very first things that they talked about, issuing families, individuals, a check of at least $1,200. If you're married filing joint, $2,400. If you have minor children under the age of 16, you'll get an additional $500. With the theory of the average family should receive about $3,200 as a check directly deposited into their bank account or in the mail, depending on whether or not IRS has deposit information on you. So that's one part of the 14 provisions. A second component of the 14 provisions is they have now relaxed the rules on being able to do charitable contributions. You used to have to itemize your deductions, file a loan form, have a house, and really be able to take a lot of deductions before your charitable donations counted. But now, starting in 2020, your charitable donations will count whether you're able to itemize or not. You will get that tax deduction. So if you're doing GoFundMe pages, if you're helping out people, you can now get a tax write-off for that. That's important to know. Number three, a third important component for individuals is you can now take money out of your retirement account retroactive back to January 1st of 2020. If you pulled money out of your retirement account, you do not have to report that full amount that you pulled out of your account until the end of the third year if you choose to roll it over. Let me give an example of what I mean. Let's say you needed your retirement money and you pulled $50,000 out of your retirement account, or $10,000 or $5,000. If you eventually put 100% of that money back, that means if you took $50,000 out in 2020 and you put back $50,000 by the end of 2023, you're not going to be taxed on it. You're not going to be penalized on it. But what if you can't put that money back? What if you need it? You have to report that income pro-ratably, a third over the next 3 years. That means you're only going to report a third of what you took out in 2020, a third of what you took out in 2021, and a third of what you took out in 2022. You can income average it over 3 years. That means you're not going to get hit with taxes, you're not going to get hit with penalties all at one time, and no penalties whatsoever. So that's really great to know. Another provision that's going to help people are those individuals that are saddled with student loans. If you have student loans and if your employer decides to help you pay off a portion of your student loans, that portion up to a certain limit is not going to be taxable to you, the person whose bill was paid. Your employer now can get a tax deduction. And the theory is to help people survive in this economy as a result of not having money to pay these bills. That's another excellent provision under this stimulus package, the CARES Act. Something that is going to help employers with the theory of keeping their employees employed is the amount of payroll taxes we have to pay as employers. As an employer, I pay a substantial amount of payroll taxes on behalf of my employees. Under the CARES Act, I can postpone payroll taxes that I would normally have to pay through the end of December 31st, 2020. I can postpone those payments until half in 2021 and half in 2022. That means a huge amount of cash flow for an employer to help me keep my employees paid. Very important that we do not have to pay our payroll taxes. That is huge, but it's a deferral, not a relief. So remember, employers, if you do not pay those payroll taxes, you do have to eventually pay them in 2021 and in 2022. This is only some help immediately right now. How about those people who find themselves with net operating losses because maybe your business is not doing well? Maybe your business didn't do well last year and you have a huge loss instead of profit. Well, guess what you can do? You could carry that loss back to 2018, to 2017, to 2016, and possibly get money back that you never would have gotten back. You can amend your taxes going backwards to put cash in your pocket today. Immediately get a refund from the IRS. It's so important to understand these provisions. There are a lot of them. I actually took the time to print the bill. This bill, when it started in the Senate Bill 3548, 276 pages. And this is not even the full CARES Act. But I love to read the bill from the Senate. I'll read the bill from the House. Then I'll read the actual 800-page law. And why do I want to do that? Because I want to make sure I understand it so I can bring you the right strategies, the right information, and accurate information. Also, in this new CARES Act is a provision for people that own real estate. It's talking about immediate expensing of real estate. Does that mean that you get to write off 100% of your real estate acquisition costs? That's certainly what it sounds like, but I am going to read further to find the fine print because I want to make sure that I bring you the accurate information on that component. But what I want to tell you that this is literally a golden goose for taxpayers. There's so many provisions in this law, and I haven't even scraped the surface. There's stuff I told you on charitable contributions. I told you on your employer paying your education loans. Employers can also get tax credits for paying employment taxes. There's the modification to the net operating loss with a 5-year carryback. That's a big deal. There's a modification on limitations of losses for corporations now. You can take major losses. The interest limitation has been lifted for corporations and businesses that have interest. There's so much here that I am telling you it's going to behoove you to absolutely do some planning. Do not just think it's business as usual for you. It's not. The laws, as we knew them yesterday, have changed. And it sounds like from everything I'm reading, and I am reading all of it, that it has changed in our favor. You need to become educated. You need to understand what's going on. And I am going to certainly advise that you jump on a strategy session with me or my team to make sure that you get the economic relief under the CARES Act that our government intended. Because anything that we do less than that will mean that we're overpaying our taxes. This is Carla Dennis. I am America's Tax Advisor, and I cannot wait to continue to educate you, talk to you, and help you keep your cash in your pocket.